Last week was marked by a sudden shift in investor sentiment, with risk aversion taking over on Monday, resulting from growing concerns over the dangers posed by the Delta variant of the virus. Assets such as stocks, oil and risk-related currencies all took a tumble, as investors priced in the possibility of a slower than expected economic recovery. However, the pessimism didn't last, and by Friday it was risk-on across the board. This is the ActivTrades Weekly Outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the release of Australian inflation data, the Fed's interest rate decision and policy statement, and we'll end our analysis by zooming in on the Eurozone's GDP and Consumer Prices Index. Early on Wednesday, the Australian Bureau of Statistics will release inflation data covering the second quarter of the year. This is usually seen as an important moment for traders of the Aussie dollar, as it weighs in the Royal Bank of Australia's decision-making process. The Australian dollar hit a multi-month low last week before staging a modest recovery as Friday approached. The Aussie has been under pressure due to global concerns related to the Delta variant that can affect the market's appetite for risk-related currencies. On the domestic front, the situation is also tough, with a batch of economic data which was published last week revealing some weaknesses. The RBA recently unveiled plans to start tapering its asset purchases. However, given the deteriorating economic situation, the central bank may be forced to rethink its intentions. Should inflation data disappoint, there will be a good chance that the plans to tighten policies will be shelved, a scenario that would weigh down on the Aussie dollar. Also on Wednesday, the US Federal Reserve will reveal its latest rate decision and policy statement, with the announcement being followed by the usual FOMC press conference. This will surely be one of those moments when investors will undoubtedly be paying close attention to their screens. The way the markets perceive the intentions of the Fed in relation to the timing of the tapering and rate hikes has been one of the main vectors behind the price action of a wide range of instruments that includes all the major currencies, gold, oil, and beyond. Although no changes in policies are expected in the near term, the way the message is communicated will be extremely important. Should the tone reflect confidence in the progress of the economic recovery, hinting at inflation-related worries, the dollar will be likely to find support. On the other hand, it is also possible that the latest employment data, which disappointed, will be mentioned, which would translate into a bearish sign for the greenback. We'll end our weekly preview by zooming in on the release of Eurozone inflation and GDP data, which comes out on Friday. This will be an important moment for Euro traders, with high readings on both accounts likely to offer support to the single currency. Last week, the President of the European Central Bank formally announced the review of the institution's policy strategy, one that marks a significant dovish pivot, creating conditions for the continuation of the current low rates for longer, even if inflation does, at times, exceed the target of 2%. There are signs of a growing divergence between the stance of the ECB and that of the Fed. While in Europe the pivot was towards a more dovish stance, on the other side of the Atlantic there are clear signs of growing hawkishness amongst Fed officials. The main reason for this discrepancy is inflation, with the latest figures in the US reading at 5.4%, while Europe recorded only 1.9%. Should the old continent's consumer prices disappoint again, then the euro will be likely to continue to suffer. This is all for today. We will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you very much for watching.